You've been told that a three-digit number is the key to your entire financial future, that a high score, an 800, maybe an 820, is some kind of badge of honor, a sign that you've finally made it. Well, that's a lie. This number isn't a measure of how wealthy you are. It's a measure of how you participate in the banking system. For decades, you've been nudged into obsessing over a number that they claim represents your financial health. Today, I'm going to show you exactly how the game is played and how you can win it on your own terms. Look, we've all been told the same story. A high credit score means you're good with money. The entire financial industry pushes this idea. They say a good score gets you the best rates, the biggest loans, the keys to your dream car and house. And okay, on the surface, they're not completely wrong. A higher score can unlock better loan terms. But what if the whole game is missing the point? What if the score was never meant to measure your wealth, but to measure how much you interact with their system? Here's the honest truth. Your credit score knows nothing about your actual wealth. It doesn't track your income, your savings, or your investments. You could have $1 million in the bank, but if you've never borrowed money, you're what's known as a credit ghost. To the banks, you might as well not exist. On the flip side, you can be drowning in debt, living paycheck to paycheck. But if you're a master at juggling on-time minimum payments, you can have a fantastic score. Ever since I got my first credit card in college, I've treated it like a debit card. I pay the balance in full every single month. I've never paid a dime in credit card interest. The system sees my on-time payments, but it doesn't see the discipline behind it or the peace of mind that comes with owing nothing. The game doesn't reward wealth. It rewards predictable activity within the credit system. It's basically a loyalty program for borrowing. So how does this all work? To understand the game, you just have to look at how the score is put together. First, 35% of your score is payment history. This just means pay your bills on time. From the lender's perspective, this proves you're a reliable customer who will honor your agreements. Fair enough. But this next part is where things get weird. 30% of your score is amounts owed, or what's called credit utilization. This is where they reveal their hand. This metric looks at what you owe versus your total credit limit. The system isn't asking you to have zero debt. It's asking you to have available credit and use it responsibly. I've seen my own score take a temporary dip right after I paid off an installment loan. Why? Because an account closed, which changed my credit history and mix. You get financially stronger by paying something off, and your score gets temporarily weaker. Think about that. The path to a high score isn't just paying everything off. It's having available credit and then using just a little bit of it, ideally under 30%, but lower is better. You're rewarded not for being in debt, but for being a professional credit manager. The rest is simple. Length of credit history is 15%. The longer you've been a customer, the better. Credit mix at 10% is for having experience with different types of loans. And new credit, another 10%, dings you for applying for too much credit too fast. When you add it all up, their ideal person isn't someone who is rich. Their ideal person is someone who's been using credit for a long time, has a mix of different accounts, always uses a bit of that credit responsibly, and reliably pays their bills. That's not a picture of someone who's financially free. That's a sketch of a predictable, low-risk customer. If you have zero debt and no credit history, you're credit invisible. It doesn't mean you have bad credit. It means you have no score. And to the algorithms that approve nearly all loans today, you don't exist. This creates a completely backward situation. You often have to use credit to prove you're responsible enough to get more credit. And this is where you have to decide to play the game, but on your own terms. If you want to do something like buy a house, you're often forced to participate. You might open a credit card you don't even need, just to generate a number. The system is literally training you to take on credit as a requirement for major life goals. Honestly, think about how ridiculous that is. The system can penalize someone who saves like crazy for 20 years and wants a mortgage just because they don't have a score. But it rewards someone who has spent 20 years skillfully juggling credit cards, who's really in a stronger financial position. They'll tell you it's about risk, and it is. But the system wasn't built to be a pure measure of your overall financial health. It was built to find and manage people who borrow, based on the data it has. If this is already making you rethink everything you've been told about money, do me a favor and hit that subscribe button. We're all about pulling back the curtain on how the financial world really works, so you can actually start winning. And of course, just when you think you've learned the rules, the game changes. Lenders are already starting to look past the old-school FICO score. The new trend is using alternative data. These new models are designed to analyze things your FICO score ignores, like your bank account cash flow, rent and utility payment history, and maybe even your online shopping habits. The goal is to get a more complete real-time snapshot of your financial life. While this might help some credit-invisible people get seen, it also proves the larger point. It has always been about predicting your behavior to assess risk. Now they're just getting creepily good at it with smarter tools. Obsessing over that one number is becoming pointless because lenders are building a much more invasive profile of you anyway. So if their score is a distraction, what should you actually be looking at? I'll tell you what I look at. I keep my own score. Stop worrying about their three-digit number and start tracking the numbers that actually measure wealth. For me, three numbers matter more than any FICO score: your net worth, your cash flow, and your savings rate. Net worth is simple: what you own minus what you owe. This is the real scoreboard. Is that number going up? If so, you're winning. Cash flow is the money left over every month. Positive cash flow is power. It's what you use to invest and build real wealth. And your savings rate is the percentage of your income you're putting away. A high savings rate is the engine that grows your net worth. So, how do you focus on this instead? First, become obsessed with your cash flow, not their score. Your number one goal is to make the gap between what you earn and what you spend as wide as possible. For me, the small bumps and dips in the score don't matter. Whether my score is 790 or 830, if I pay my bills on time and my balance in full, the result for my bank account is the same: zero interest paid. That extra cash is your power. It's your peace of mind. It's what ensures a surprise car repair doesn't become a 5-month credit card debt. It's what you use to build an emergency fund and invest so your money starts working for you. Now, for the big one: buying a house. This is where I treat the credit score like a passport I might need for one specific trip. But there's a secret weapon for people who live a debt-free lifestyle. It's called manual underwriting. Instead of showing them a three-digit number, you show them real proof of financial health. A human being, not an algorithm, looks at your actual income, the massive down payment you saved, your job history, and your assets. I'm talking pay stubs, bank statements, tax returns, the works. It takes more paperwork, and you have to find the right lender. But it's 100% possible to get a mortgage without spending years just trying to build a score. It's proof that real financial discipline is more powerful than any number they can assign you. Look, the system encourages you to chase their number, to collect credit cards, keep old accounts open, and use credit, all to please an algorithm built to measure how much of a risk you are to them. For years, the lie has been that financial success is defined by how well you can borrow. I've built my life on a different truth. Real success is building a life where you don't have to. The real way to win isn't to chase an 850. It's to build a financial life so strong that their score becomes irrelevant. Focus on your net worth, protect your cash flow, and save like your future depends on it. Because it does. Build a life where you are in control, not some algorithm. That is true financial freedom. Thanks for watching.